Okay, so let me check the dashboard here. Okay, so it looks like we are live, so I'm gonna go ahead and start kind of going into the overall day and what we've seen. We did go ahead and complete a green day. Wasn't the biggest day, but still across the accounts, it's still a good day. Definitely a 1 hour day. Definitely a day that counts towards like payout potentials. So that's all that always matters, right? I think it's like 150 now, not 200 anymore. It used to be 200 in the old days. So gonna go over a couple things today, right? One, I'm gonna go over the bias that I gave out to start the session of inside the Discord, right? If you haven't had a chance to join the Discord, guys, it's in the description of the post for this video. And we talked a little bit about what we wanted to see from the dollar index. Let me go ahead and move this here. We talked about what we wanted to see from dollar index, and we wanted to see more downside here on the weekly, right? We've been pretty bearish ever since we tapped that 150 level, right? And so one thing I want to talk about too is that, the way that I learned how to trade these markets was understanding that individuals control these markets by algorithms, right? So the logical individual right now doesn't understand why, we're in a war times and the NQ is pushing higher. It's not about why, right? That's happening, right? The real question you want to ask yourself is, who are you as the observer? Okay, who are you as the observer, and what do you use as criteria to observe the markets? And a lot of times, what most people don't even realize is that they've gotten to the markets, and the markets are basically getting to them so bad because they've been looking at them from a perspective of an emotional observer, right? And so that's just how it works, right? And so I'm not always right inside these areas, right? Sometimes you're a little bit early. You see it still play out. Sometimes, you're a tad bit late. Maybe there's a little bit of hesitation. Maybe there could be all these different factors. That's why you really want to set your mental environment and really get ready for the day and have a routine in that sense as well. But looking at dollar, we wanted to see more downside. Now, as you can see, for today, we pretty much just went up and touched that 98,250, but we still haven't broke that level that we were looking for, which was essentially inside intraday time frame was in here, right? So we haven't seen price break below daily open on Wednesday, and now we have a new open for Thursday. So possibly we could see price go back to earlier the week, 98,250 and higher, and we'll see how that will affect the markets. But we wanted to see that push down from the daily bar yesterday. Now, when it comes to oil, okay, I'm going to go to multiple higher time frames here. It only makes sense, guys, with order flow, once you have an understanding of how order flow actually truly works, that you see that they're really repeating the same pattern, right? I remember when oil went to zero, right? $5 here a barrel went to zero, right? And individuals thought it would never come back to $110 a barrel. But as you can see, this is supply. It literally comes and hits supply perfectly. So the long positions, everybody that longed oil from 10 to 50 to 65 to 70, right up in here, they longed and they were able to get out of for a nice profit above the 110, 115s because the markets are controlled. There's an algorithm. There's no way around that. Okay, like I have a lot of stuff on my higher time frame one, so it's kind of hard to see. But as you can see here, this was 4/20/2020, right? So literally 6 years ago when oil hit the bottom, and that's how you have to have the perspective of understanding of how long this stuff takes, right? I watched price from this area, 2020, come back and destroy this liquidity, come into the supply candle perfectly, and price sell off, right? So now when you look to the future, right, and you see how high from this level here at the lows to where they've pushed it, this essentially is like the halfway point. Anything above here, you don't want to really be battling buys in this area, right now. As of I would say I don't think that's something you want to do. The reason being is because of how they engineered these lows here and how they've respected, just like they did in the previous year. If you look here, right, the 104, the buys ran up crazy in the last 2 months, right? So from February, and then coming in here to March. March ran up, but why did March come right into this candle exactly 108, right, and turn around? Because the algorithm, it favors 20s and 80 levels, right? So it's also as well, not only is these zones that we look for, we call supply demand, right? These are areas when you're playing the game from a bigger picture, that you got to understand that buyers that see a price from a higher time frame, where they're going to exit, right? And what's too high and what's low, right? Most people don't really have an understanding of what's high and what's low. They just kind of guess. So when it comes to oil, right, what we were looking for today, because of how price engineered the overnight, was overnight price had ran down to 87.50 half level exactly. Now, if you look left, right, if you look left, you're still respecting a demand candle, which is also where the individuals who shorted the overnight, right, so around this time here in about 4 minutes, they shorted this overnight, they started to cover their position. The reason why they covered their position is because they never got the new low to deliver on oil, which was 86.38, right? So they never got this to deliver, so they started to cover, if you're looking on the right screen, in that position, and that's why a wick is formed right here. Okay, so I've looked at so much price that I can have an idea in a certain location what's going to happen. Now, what's high and what's low? Well, if you don't really know by just looking at candles, you can use line graph, okay? And so line graph shows you this was your last low, this was your last high. So this is your range, right? This is your range, and everything in between these areas is very key of knowing what to look for, okay? And so this area here was the area I'm talking about, this down candle right here from Wednesday the 25th of March 2026, right? And so they're still defending, even though I want to see bearish oil, they're still defending that level currently, right? Like if you see the price from today, they're defending this New York low. They're defending this down candle here that they used to just body those people to 87.50. Now, tonight, what I'm really interested in, like in the overnight, like coming up here in about 2 minutes, and then just going into tomorrow, Thursday and Friday, are they gonna respect this 80 or this 89 level bounce and start to run this price higher, or are they gonna eventually roll over to what says LOD now is now the previous day low, right? So previous day low, and then they have that bigger liquidity target, 87 whole level, let's just say, and lower. So if you go and look at these side by side today, I'll kind of go over the entry I took for NQ, and I'll show the entry of what I call the play of the day. The play of the day was definitely on the 15 and 5 minute right at New York Open. There was definitely a really, really nice play. But our goal in the pre-market was to see price get up into this 4-hour supply candles open, right? So when price fell over, we wanted to see price get into the 26,200 level. It exceeded that, which that was all I really wanted today in an intermarket analysis setup. But we were looking for the punch of the double top liquidity here for the 26,300 level, okay? And so those got delivered. But now what I'm going to do is I'm going to go over the actual positions that I took. Let me see if they're making sure they're on here right now. Let's do one thing here. I'll go over the actual position I took on the stream, and then go over the position that I hesitated on taking, and that I think was a beautiful position to take, okay? And so this was, I'm going to go 15 and 5. So this was the 15 and 5, okay? So at the equities open, right, you want to play it like when it's in the first 15 minutes, so 8:30 to 8:35, 35 to 40, 40 to 45, you want to be taking that position, but you want to be a little bit more aggressive on your preservation of capital. And that's only because there's so many things that can happen where if you just preserve your capital, you still have a chance to still shoot that day and still take probably a pretty good trade. Now, coming into this bias, right, we already seen, let me make sure I bring oil over. We already seen that we had the bias to see oil kind of start to move lower intraday. We didn't know if it was going to break structure. We didn't know if it was going to go reach for that low area that I showed. We didn't know, right? But we did know that coming into the open of equities, this is all you could see, right? So basically price at the equities open was stacking higher highs and higher lows. And, right, the way they engineered the liquidity before even equities open, right, so it looked like this at one point. This would have been 7 a.m., right, so 7:15. Now people would be selling this, I think would be kind of crazy, but like I think it was around here when it responded. Right now, when it responded, this is what you could see at 7:30 going into 7:45, right? And this is when I start looking at the charts. And let me make sure I got the chat up over here. Okay, and so what I was seeing is that, okay, cool, it's obviously stacking. It has really good low resistant high liquidity here at 26,050, and it looks doable, right? It looks like it definitely wants to go take that area. Now, I was kind of hesitant because it was so obvious, right? It was so obvious, but I did think it was a pretty good area. Now, when you see the New York Open, this would have been 8:30 right here, 8:30 to 8:35, and then 8:35 to 8:40, and then the 8:40 to 8:45 candle. This is where you had to really be on your P's and Q's, because my execution window is the first 15 minutes of the hour and the last 15 minutes of the hour, and I like 5-minute candle closes, okay? So now what we're going to do is we're going to look and study this down candle inside the 5-minute and 1-minute. Now, what you got to be thinking is looking left to get right. As price is slamming down super fast, this is something that I learned as well. You want to buy when the market's crashing, and you want to sell when the market's taking off. Right? I'll say it again. You want to buy when the market is crashing, and you want to sell when the market's taking off. So what do I mean by that? In this 15-minute candle, 8:30 to 8:45, the market is crashing, but it's crashing back where? Into demand, into point of interest. Right? And this is where people have already gotten chopped up because they're playing 1 minute and 30-second and 3-minute time frames, right? So I still play 1 minute, but I'm just saying there's people who play like tick charts and, really just scalp the market. They're not letting things play out based on these things that I teach. And so you're seeing the perfect setup. Now, when I go over to the 5 and the 1 minute, I'll kind of show you where I hesitated, and then I'll show you where I ended up taking a little bit safer of an entry, but still could have, really capitalized on this move. So I hope me showing you guys this will help you capitalize on this move the next time you see it, because I promise you I will not miss it right at this daily open. Because I showed you guys the 15, right? And now I'm going into the 5 and the 1. Now you have to be really quick on this, and you have to be really understanding of that transitional moment of time, okay? So that 5-minute candle right here, 8:40 to 8:45, when this candle opens, it's 8:40. When this candle's closing, because the candle closes down here, right? So let's go to replay mode. When this candle closes, at this moment right here, people are panicking, and people who don't know the rules of the game, they're selling because of emotion. So they just see it start selling, and by the time they finally hit the button, it's usually past here or here, right? And they don't realize that they're selling right into the hand of the market makers, right? And so now there's nothing wrong with a trade like this, because this did top tick, right, the high of day, right? So it's not bad. You could be expecting buyers to be giving up and possible London lows to be delivered. But the problem is with most people is that they go back and actually plot their positions or their entries. I guarantee you they're selling positions on a 1 minute, like here, right? As I'm like, they're doing it backwards, like what I'm saying, right? You want to take it right in that last minute before the 5-minute close. They're taking their sells here, and where it's showing up on a higher time frame is here. So like basically I'm just showing you, if you were to be like looking and you like say you're like, oh yeah, I want to short here, and then you short, and most likely, the rule is to sell above New York Open in bearish conditions. So most people, when they see this move, they're playing a short somewhere probably in here, I would say, right? Which isn't bad, because you're inside the 5-minute supply, getting down to point of interest. Now, here's the mantra though, right? When you're in a position, like say you took 26,050s and you took that down to daily open, that's why we plot these areas. You need to protect or pay yourself at point of interest. I say it all the time, especially on stream, right? Protect or pay yourself at point of interest. Now, here's where I want to show from the perspective of where I sat on the sidelines, but this was a really good move. So 40 to 45, the candle closes. Now on that 15, what it's doing is it's closing inside that demand and inside 5-minute demand. So let's say you didn't take the trade, this would have been right here, 44 to 45. This would have been 45 to 46, right? I like to see that 1 minute sign of strength and then play the second candle. So let's see where that area would have come up. So I like to see that candle to respect off daily, get one sign of bullish, and then I like to play the second candle with my risk, okay? And so this would have been a beautiful setup, okay? And then we had an overall target of 26,200, and then if we got that liquidity delivery from that 4-hour area that I called the double tops, that was 25,260, Okay, and so now I'm going to go through this range and kind of explain why when it hit the 250s, why didn't it continue to fall, and where did it fall into, right? 20 level, right? 26,120 and a level of demand, trap candle to continue higher, because it needed to deliver that liquidity of those 260s. There's no way around it. Okay, so this area would have been beautiful, right? For what we look for, right? It was just like I said, it was just such a bang bang play and so fast, right? That first minute, that candle 45 to 46, that candle alone. Let's see how far that was. That was like a 20 handle move. So it would have been a really nice move. And then the positioning of being on the right side of a dump candle in the 5 minute would have been perfect as well. So let's just say, like I said, that one was, for me, it was hesitation. Right, I was like, it just happened so fast in the opening range that I was like, damn. Now let's say that you didn't take that off the tap, right, and you got the 5 minute sign of strength here, 845 to 850. So basically, what I'm looking at here is like the open of this candle here and the close of this candle here. Now, I will say this, if you're looking at this from a perspective of higher highs and higher lows in that 1 minute, there definitely was another good setup, I think, and I like to buy below New York open in bullish conditions, especially if the location aligns with the demand candles, right? And so this would have been a really good area to still frame up, but it just didn't look as good to me today. Like, I wanted it to come lower on 1 minute. It was in the 50% of a 5 minute candle, so that did fit my criteria. But it just didn't come low enough on that 1 minute. I wanted 26,020s at least to deliver like this little. There was like a small little gap here on the 1 minute with a 1 minute candle with no wick, right? So, but they did come back exactly and tap that New York open, and then that next 5 minute candle, 50 to 55, closed bullish, and then 55 to 9, right? So the new 9 a.m. we got a break on structure on the 5 minute higher high, showing signs of strength to push to the upside, all right? And so that was really good. I thought as well as like a continuation trade. And then the trade that I ended up taking, I didn't want to take a late trade, but I didn't want to take a breakout trade really either. But at this point, because I had missed that 5 minute area and I still had that higher time frame bias, for that 26,260 liquidity to deliver, and I also wanted 26,250, or 26,200, right? That's what you're looking for in the 4 hour. I still was with the bias at this point right here at 9 a.m. that we were going to go higher. So very same thing as yesterday. The only difference was when they don't fight the market when it's bullish, right? Like, don't look for the shorts just because the fact that that you want to see that area, because the market's not going to respond to that. So what I liked here was how this down candle stayed, right? So I'm looking at this down candle here, 905 to 910. And then they closed the candle higher, 910 to 915, right? And right there is a sign of strength. If you look at like a line graph, you can really see that obviously prices, when the body candle closes is what I really look for, that confirmed structure. And so for right here, what I ended up seeing was, okay, we're above, we're above the high of day, right? So we're definitely confirming that we're strong, and we're very close to delivering that 25,200 if we just blast up from this level. And I could define edge, right? Now, if I can define edge, I'll take the trade. And so now you have 915 to 920. That's where the candle closes, right? You want to be buying when the market's crashing. You want to be selling when the market's taking off. And so this area right here framed up with a good risk, right? And I was subjective to the fact of, just being in the mode, right? It was the right time. Essentially, it was like a little bit like you had to buy it like right here at 915 and the 20, right? So it fit my time criteria, and it fit being with the trend of the market instead of trying to fight the market and trying to force short positions, right? And so we were able to take that up for a 1 to 3 in that area, and then it did go ahead and extend up to like the 1 to 5 zone, those 26,180s, 26,180. Once it kind of fell off here one time, then fell off here again, I trailed my risk up a little bit into the 26,150s and ended up closing out for the day on about half of 4R, so it was about 2.2R because I used half volume. Now that's another thing, right? If I would have taken this position where I wanted to in that daily open or that New York open area, I go full volume, but because it was a continuation trade, I just went ahead and used half volume on the trade, because that way I can still manage the trade based on the math, right? So if it moves 5R, I know it's 2.5R because it's half, right? And if it moves as well like it did today, and we wanted that liquidity to deliver from this zone, so we were looking at this area here, and it would have delivered, let's see here, or it did deliver, excuse me. That was looking like almost like a 10R, right? Like a 10R, even if you only had half volume on, you're still hitting a 5R day. That's an amazing day, okay? And so that's pretty much what I was seeing today. I think the best moves, like I said, were the bounces here on the 15 inside demand, like we talked about, off point of interest inside the right levels where shorts are going to cover. And then the next area was, I thought, where I took the trade actually is like in the 260s or 26,060s up, into our target. Now the next best place was everybody's going to be looking when they miss the buy positions that are really good. They're always going to be looking for shorts. And so I know, based on just taking bad trades myself, or being emotional, or just just shit not going your way, whatever. I know a lot of people, every time they would pull this 5-minute dump candle like this, it makes people emotionally short, right? Emotionally short, and then they finally run it to the level of 26,250. The people that are emotionally shorting are the people who play small time frames with no higher time frame context. I mean, I don't know how many times I've literally got to say that too. Like, it's literally the same thing over and over. That's why we mark out the morning routine, or the morning price levels and things that we're looking for, because they shouldn't have even looked for shorts until 26,150, right? Because they need to be in alignment with supply, right? You need to be in alignment with where liquidity is going to be drawn on, right? So it doesn't even make sense to short in these situations when price is just going to continue to rally up. Only time that you want to short, and remember this, like I have to tell myself this, right? The only time you want to short is when you feel like the buyers are ready to exit. So why does it sell off at 250s and not sell off in these other areas? Because this is bullish structure. Higher high, higher low, higher high, higher low, higher high. Every 5-minute demand candle is being respected. Look at that. Look how it works on the way up. Right? If you look at these demand candles from a perspective of stacking, respects, right? It isn't until it gets to the level that the buyers are willing to let go of their position that price sells off. Now, the person sells this, most likely they're not selling inside of the area here. Like, I was looking at this as like a good sell anywhere above that 200 level, and basically somewhere in here on 5-minute, like those were good sells. So 15-minute supply zone, which was 26,200, and inside that 5-minute area to get back down to either here, right, like, or back to New York. So like selling from here to get back to New York, or low of day, right? Or you were going to see the trap candle, which you had to identify this candle, right, because it's the one that goes in alignment with the expansion. If this area falls, right, let's say you had 26,230s down to 26,000, let's just say 130s, you fell 100 handles. You just caught. That's why you have to use risk multiple. That's a 5R move based on how we trade, right? And so why does the price end up going and taking out the new high? Because the buyers aren't willing to let go of their positions. Shorts are beginning to cover because they realize they're not getting farther than 26.1 or back down to 26.050, or even New York Open or 26,000 whole level, right? And so the shorts start to cover, and that's why you see it rally so crazy and take out the people who are selling this area, because that's how order flow works. Okay. So I thought it was a pretty good day, and I think looking at this from a 15.5 perspective as well, they gave a pretty good position after they closed this candle. So I want to see what it looks like on a 1-minute as well. In this area. So this was a good 5-minute close, 11:55 to 12, and then that next candle opens. This would have been choppy, right? This, to me personally, like playing a 1-minute buy on that situation would have been a little bit choppy. Let me see it on the 15.5 again, and then the 5-minute candle closes, and then so you would have had to definitely be right here at the open of this candle at 12, ready to buy that position like this essentially. Right, so this candle opens 12, you would have been essentially ready to buy it, which that's not a bad move, because you're looking at individuals that don't understand, like, okay, they shorted the 250s, but they don't understand that that's the buyers exiting from the New York low and the London low, right? It's just what it is. And so now that you see that in that time window, like I said, the algorithm likes to work in the first 15 minutes and the last 15 minutes of the hour. You're seeing now right here 11:55 going into 12, that the algorithm is picking up the price inside the specific levels that it wants. The reason being is because people who are long, there's lots of things going on in the markets, right? But I truly believe from just playing different ways that I kind of can see different things that are going on. I know that if I bought positions inside this accumulation in this area, or even the position that I still had from here, right? Looking at this level here, I know that if I have that position, I'm either break even on runners, or I've trailed risk up to the low of this down candle, which the low of this down candle in the 15 happens to also be inside of an FEG, right? This right here is a fair value, right? Fair value gap. So 26,100. And so them taking the people that probably have trailed risk to this area, right? If they left a little runner on or left that, they're coming to clean that up and then turn the market back around and go back the other way. And they do this redundantly over and over and over and over and over and over and over. Okay? So we'll see. Let's see how oil opened. I feel like oil has the chance to still get to 87. It just makes complete sense in my eyes. I wouldn't see how anything could change. Now you're like, well, what's going on with the war, different stuff like that? Anything could come out, right, and change a lot of things, right? Because they're still holding demand as well. They haven't really broke the candle that I'm looking for them to break, and they push down to an area. And the reason why it's a wick, so that they can get a price level that other people can't get. The bodies is where the retail trader is. The wick entries and the wick areas are only areas that the institutional players can get because they create them. Okay, so looking at the overall markets too. Let me see here. Just want to look at daily or weeklies. We talked about potentially seeing, right, from this gap. We talked about potentially seeing all-time highs, right? Low resistance highs on NQ, right? The pushback to supply on YM, 49,000. We've been talking about this for 2 weeks. All right. Now, I want to show something here really quick, too, for the NAS 100, because people think that the markets don't move in phases, right? We got this same type of move last year, right? Without the war. Right? So if you look at price, right, this is NAS 100, basically mimics the NQ, right? When you look at the push down from February, this would have been the highs of last year. That push down to the low of last year was 26% down. Okay, and that's with no war. The move we just seen from the high of the year, same thing, right? January 2026, the move down was 13%. Right? So we do it again here. 13%. So this is nothing. This is nothing. We know to look for these levels. We know that on everything we see on a lower time frame is the same thing we see on higher time frame, right? And so when we seen people shorting 2026 to start, right, we knew that 23,000 with a double bottom low inside demand was a great level. To be real, I was really wanting to see if they could come back to like the support resistance imbalance right here. But I said if they hold this candle, right, in these last 2 weeks is what we've seen. If they hold this candle, they're going to go take, especially on NAS because it was equal tops. Now take a look at this. This is where some real manipulation is, okay? When you really think about this stuff. NQ, right? NQ has low resistance highs, right? You see how they're shaped, that shape here? So it looks like this. And then this has equal highs. So this was like giving me the key. Right, this was kind of given the key in the NAS 100. We used to trade this every day. So, are you trading for Asia server? I'm not trading Asian. I'm just going over right now like the moves that we took today. But like I do use like the NAS 100 here, because I used to trade CFD quite a bit and have a lot of swing positions. So I'm just kind of going over this to kind of show the ideas of why we're wanting to see higher time frame on or higher time frame all-time highs on NQ potentially. So looking at the overnight, I can go over that here really quick, what I kind of anticipate for NQ and NAS 100. I anticipate that we're going to go for all-time highs here, right? Because why would we not here at one point? Okay, let me do this really quick. All right, so all-time highs are 26,579, essentially 26,600, right? Whole level. So I know I have a lot of lines on this chart. So 26,600. Okay. And so that's the target area for me. Why not? It's the all-time highs, right? We've already made the pushes through. We've already went past the area that we talked about getting past, which was this week already, 25,700. We've already gotten past the liquidity spot here, 26,300, you know? So we'll see what we get for tomorrow. We'll be live in the Discord. Like I said, again, if you haven't had a chance to join a Discord, it's inside the description of this video. And I look forward to trading with you guys on the next session. I will look to trade, at least I'm looking at 2 days a week on YouTube, and just whenever it's just easier to get up and upload and go. But I'm looking to do it this Friday. We'll see kind of how we have, what kind of day we have tomorrow, and then see what Friday looks like. But I'll always continue to keep doing as much as I can the trade reviews here, and just going over the structure and using oil and those other different things to navigate. And then here soon we'll start looking at some of the cryptos as well, and just kind of seeing what areas and zones we're looking for and some of those assets, and then as well stocks. Right now it just makes sense to see what's going to happen, going into the overnight, because price is just super inflated and overbought at this point. So, and I think people are going to be trying to really push this high, and that could be a situation where we look for the noobs, buy tops, and sell bottoms. So we'll see. But appreciate you guys watching, and I'll see you guys on the next one.